Good morning and welcome to today's financial broadcast. Let's start with a quick recap of last night's U.S. markets. The three major indices closed essentially flat. The Nasdaq finished at 25,832.67, the S&P 500 at 7,483.24, and the Dow Jones at 52,900.07, all with 0% change. However, futures showed some divergence in pre-market trading. Nasdaq futures edged up 0.23%, S&P futures dipped 0.03%, and Dow futures fell 0.36%. This suggests that tech stocks might get a breather while traditional sectors face more pressure. In individual stocks, Tesla dropped 7.03%, continuing its recent weakness, but the decline did not exceed 8%, so no separate verification is needed. MicroStrategy rose 7.07%, driven by its Bitcoin holdings premium. BlackRock's Bitcoin ETF gained 2.62%, moving in sync with the ETH and BTC rally, indicating a recovery in crypto sentiment. Now let's look at the global macro picture. The 10-year U.S. Treasury yield stands at 4.48%, essentially flat from the previous day and still near the high of 4.5%. This has not signaled any easing in liquidity, which continues to pressure high-valuation growth stocks. The VIX Volatility Index is at 15.91, well within the normal range of 15 to 25, and down 1.49% from yesterday. This suggests market sentiment is moderate with no panic selling. The US dollar index is at 100.82, edging up 0.11% but still in a relatively weak range, which means limited pressure on emerging market assets. WTI crude oil is at $68.47 per barrel, down 0.93%, while spot gold is at $4,183.50 per ounce, down 0.19%. Both are moving lower in tandem, reflecting weak global demand expectations, but the declines are limited and have not triggered a safe haven rush. In summary, the market is in a consolidation phase. Risk-off sentiment has been fully priced in but has not completely reversed, and there is a lack of clear directional catalysts. If the VIX breaks below 15 or the dollar index drops below 100.5, the market could shift to risk-on mode. Turning to the Chinese yuan and external conditions for Chinese assets. The onshore yuan is at 6.7692 against the dollar, appreciating 0.15%, while the offshore rate is at 6.7842, nearly flat. The onshore appreciation suggests the yuan remains stable under the central parity guidance. The yuan has strengthened from around 6.79 to 6.77 recently, which helps attract foreign capital back into A shares. On the trade and technology front between China and the U.S., as of July 3, there have been no verified new major events, and tech control policies remain unchanged. Our pre-market sentiment for A shares today is a flat open. This is based on the divergence in overseas futures, a modest gain in A shares yesterday, and support from a stronger yuan, but there is a lack of fresh catalysts. If Nasdaq futures turn more than 0.5% negative before the open, or if the offshore yuan quickly breaks below 6.80, we could see a lower open. For today's A-share market, the Shanghai Composite closed yesterday at 4,043.64, up 0.37%, while the Shenzhen Component rose 0.64%. In the short term, there is a lack of breakout momentum, so we expect the market to remain range-bound today, with the Shanghai Composite trading between 4020 and 4070 points. If northbound capital flows show a net outflow of more than 20 billion yuan at the open, or if the Shanghai Composite breaks below the key 4,000-point level, we should turn cautious. The most likely active sectors today are AI computing infrastructure upstream bottlenecks, such as optical communications, indium phosphide substrates, and CoAS packaging, along with defensive sectors like utilities and power. The logic is that in a correction environment, capital is seeking out subsectors with clear technological moats within AI hardware. These names, after their monthly pullbacks, still trade well above their 200-day moving averages, making them relatively resilient. Meanwhile, utilities benefit from high dividend demand in a high interest rate environment. On the risk avoidance side, POET, which focuses on silicon photonics integration, has plunged 43% in the past month, indicating serious doubts about its technology roadmap. We recommend cutting positions immediately. AXTI, a gallium arsenide wafer company, has lost nearly 50% over the month and has a PEG ratio of 12, posing extremely high geopolitical risk. This should be actively avoided. Also, Tesla-related concept stocks need close monitoring due to the risk of sentiment contagion from TSLA's continued decline. For northbound capital, with the onshore yuan strengthening and overseas sentiment stable, we expect a modest net inflow today, ranging from 0 to 30 billion yuan. The key signal to watch is whether the Shanghai-Hong Kong Connect capital flow remains positive in the first 30 minutes after the open. Now for our individual stock radar. For AeroVironment, a defense drone company, our direction is a pullback after a rally or high-level consolidation, with a 55% probability and a time window of 1 to 3 trading days. The trigger is growing demand for defense drones driving upstream sensor and vision chip bottleneck logic, but since the price data is pending verification, we advise not chasing highs and waiting for a pullback to test the position with a small size. The invalid condition is if the stock breaks below the day's low or if market conditions worsen. For 5802.T, an indium phosphide substrate company, our direction is relatively resilient, with a 58% probability and a time window of 1 to 5 trading days. The trigger is that as a bottleneck material for high-speed optical communications, it remains above its 200-day moving average after the monthly pullback, and the logic remains intact. The invalid condition is a break below the 200-day moving average or a breakdown in the catch-up logic. The position discipline is to continue holding. For POET, the silicon photonics company, our direction is that downside risk dominates, with a 65% probability and a time window of 1 to 5 trading days. The trigger is that the 43% monthly plunge shows a serious lack of confidence in commercialization and high geopolitical risk. The invalid condition is if the stock reclaims key moving averages and short-side risk declines. The position discipline is to cut positions immediately or observe with caution. Here is our one-sentence core judgment for today: U.S. Treasuries are range-bound at high levels, the VIX is normal, the yuan is stable, and A shares are in a structural consolidation, with focus on AI upstream bottlenecks and defensive power plays. Our probability assessment for today is 25% for an up move, 50% for a sideways move, and 25% for a down move. Thank you for watching, and we will see you in our next session.